Hello everybody. Another week's gone by and a lot to report on. As you know, it's been a week of lower than usual liquidity. This is mainly because of an extended holiday in Asia, with Japan especially having 10 days off, which is quite extraordinary. Also in Europe, of course, we've had Labor Day, which is also a day off in most markets. So liquidity and volatility a little bit below the usual levels. But going back to report on what actually happened, we'll start by looking at the earnings. Earnings season well on its way. And I will pick two examples, both tech companies, both American companies, but with very different outcomes in regards to the results they published. So starting with the good one, Apple. Not that they reported such great results, but they come up with revenue forecasts that largely exceeded what most observers expected, what the markets were expecting. And therefore, markets reacted very positively. The share of price share went up, and Apple is once again a company with a market cap above $1 trillion US. That's quite a lot. On the other side of the spectrum, we've had Google, so Alphabet, the parent company of Google, didn't really do so well. This is because the results they published, the revenue, fell 3% below the forecast. So not so good for Alphabet, for Google. As a result, share price dropped quite a lot, and they lost in market cap about $70 billion. Moving on, elsewhere in Europe, we've had the GDP figures published for Italy and Spain. Actually pretty good, much better than what's been the latest underscore tune for Europe results. Positive, above expectations, GDP doing well. Also, we've had inflation in Germany, which touched 2%, which was also above expectations, and 2%. It's quite a healthy level of inflation to have. So as a result, the euro moved once again above the $1.12 handle, and that's where it's staying at the moment. Obviously, not a massive move, not really that great, but we must remember that there's loads of downside risk for the Eurozone, political, growth of the economies, etc. So things are what they are, but good news from Europe, finally. Moving on, next topic, Fed. Fed had its FOMC meeting on Wednesday, followed by a speech by its chairman, Jerome Powell. And the decision is that there will be no rate change in the foreseeable future. So Jerome Powell afterwards announced during a speech that in their view, there is no reason to alter interest rates. This goes a little bit against what some expected. Some were expecting a cut in interest rates. President Trump has been quite vocal about it as well. And therefore, the result was immediately felt in the markets, with the S&P dropping a few tenths of 1% and the dollar, of course, going up. This is because many investors expected a lower interest rate reference from the Fed and were looking to invest in equities to get better returns, but because that didn't materialize, they moved their money back to cash and looked into dollars. Moving on, England, Bank of England, UK, Brexit, what's going on there? Well, according to some reports, Theresa May and Jeremy Corbyn are close to find some sort of understanding, and there may be support in Parliament for the withdrawal agreement, although it's not certain yet. And judging by recent history, it's not very likely, but we'll wait and see. Bank of England will announce today the rate decision. Highly unlikely there will be any change, and therefore the pound remains quite stable and at the moment trading above $1.30. Finally, I will leave you with a thought for the day, and this is in regards to Uber. IPO, filed for an IPO, looking to raise about $9 billion, which would give the company a valuation of $90 billion. This is quite extraordinary if we think that this company has been burning cash at the pace of $3 billion a year. This is all for this week. Thank you.